Hello again, students. We're going to continue to talk about merchandising, and in this video I'm going to talk a little bit about how the financial statements for a merchandising business are different from a service business. And this of course is covered in your textbook. What I have here is a very simple or simplified version of a multi-step income statement. Where we're going to start off, of course we're going to start off with the heading, the name of the company, the name of the statement, and then the date, and of course for an income statement it is for the period ended there. And then we're going to start off with our revenue account, which normally for a merchandise business is sales. Then we're going to subtract out those two contra sales accounts, sales discounts, sales returns and allowances, and then we're going to come up with a term that we will call net sales. Okay? Then from the net sales we're going to subtract the cost of the merchandise sold, and then we'll come up with gross profit. Now you don't have this on your income statement for a service organization. For a service organization you typically would just have revenue accounts, and then you would subtract from that all of your expense accounts. So we come down to gross profit, and of course a very simple definition of gross profit is sales minus cost of merchandise sold. We are going to get net sales though, because we're going to subtract out these contra accounts to get net sales. We come down to gross profit. That is the profit just on the merchandise itself before we consider any other expenses. And then we will subtract out the selling and administrative expenses. These are usually broken out separate into two separate categories. You get a subtotal and then you get a total of all of your expenses. Subtract it from your gross profit and you come up with your net income. So this part, subtracting your expenses from your revenue and getting net income, is the same as the service organization, but you would not have the top part here for a service organization. Okay, also this chapter introduces a new form of the balance sheet. I don't have it up here, but it introduces a report form of the balance sheet. We've talked about a classified balance sheet where you have broken out all of your current assets and your current liabilities, and your long-term or non-current, and also your long-term assets and your long-term liabilities. So we've talked about that. But what we've done in the past, we've had an account form of the balance sheet where you have the assets on one side and the liabilities and owner's equity on the other side. This chapter does introduce a new form of balance sheet, which is the report form of the balance sheet, which has your assets at the top and your liabilities and owner's equity at the bottom. You get the same information, but it just is listed in a different format. This will conclude this particular video. If you have any questions, let me know. Thank you.